The US dollar was under pressure across the board as Monday trade kicked off, but the setbacks were well supported with the buck recovering into the latter half of the day. There wasn't much going on as far as Monday's specific risk went that would have reconciled the early dollar weakness, with the moves mostly assigned to the bigger picture trend that has not been kind to the buck over the past several months. And yet recent signs of higher inflation in the US have forced many out there to reconsider dollar short exposure, and this has helped to prop the buck over the past couple of weeks. ECB Draghi's statement to the European Parliament helped to drive the dollar recovery some more after the central banker warned inflation had yet to show a sustained upward trend, while also flagging FX moves deserved attention, a reference to concerns about unwanted appreciation in the euro. This seemed to keep the dollar in recovery mode across the board. The Canadian dollar was lower on the day and underperformed in the developed currency space as NAFTA risk crept back in, while the pound was also lower on the day, with the UK currency perhaps a little more shaky on Labour Party splits drama. Looking ahead, Tuesday should be an interesting day, with the market getting a good look at the new Fed chair as he testifies before the House Financial Services Committee, but that's not all as far as Fed risk goes per se, with former Fed Chair Bernanke sitting down to interview the latest former Fed Chair as Janet Yellen talks about her time at the Fed, her thoughts on the economy, and the current challenges. Economic data out on Tuesday includes New Zealand trade, Eurozone sentiment and confidence readings, German CPI, U.S. durable goods, and U.S. trade. It's worth noting the Fed chair will be testifying again on Thursday, which could be of greater interest with a very important U.S. core PCE reading out on Thursday as well, possibly shedding even more light on the Fed policy outlook, something that will have a big impact on the dollar and global risk sentiment. That's all for now.